Warren Buffett is arguably the greatest investor of all time. So when Warren Buffett owns a stock, it makes a lot of investors consider if they should own it too. I've evaluated Warren Buffett's portfolio of stocks that he owns in the Berkshire Hathaway portfolio he manages, and I've selected the top Warren Buffett stock to buy here in 2025. I'm going to share with you what that stock is and why I'm recommending it or why I've rated it as the top Warren Buffett stock to buy here in 2025. So let's see what it is.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Amazon is the top Warren Buffett stock for 2025, in my opinion. Warren Buffett owns 1.863 billion shares of Amazon stock in the Berkshire Hathaway portfolio. So this is inside of that portfolio that Warren Buffett manages and not in a personal account. So why does Warren Buffett like Amazon stock? Well, it could be for a number of reasons. Most notably, I think it's Amazon's competitive advantages and the moat around the business, which makes it difficult for competition to encroach and take share of Amazon's dominant business. Now, while Amazon makes more profit in the cloud services segment, the e-commerce segment is what drives the overall business and what drives the competitive advantages in Amazon's business. In growing to large-scale e-commerce revenue, Amazon allows itself to add incremental revenue streams onto that core, such as advertising. Its advertising business would not be where it is today if it didn't have such a dominant share in the e-commerce market worldwide. And fortunately for Amazon, the e-commerce market is expected to grow significantly. The forecast is that the e-commerce market is projected to reach $4.791 trillion in 2025. That's right, $1 trillion. It's a massive market, and it's expected to grow at a compounded annual rate of 7.8%, which means that if that does come to fruition, the market will be worth 6.5 trillion by 2029, or a roughly increase of $1.7 trillion in 5 years. So that's a lot of incremental revenue. Now that's worldwide, so it's not going to be all in the markets that Amazon operates. In fact, China is projected to be the largest market for e-commerce where Amazon doesn't have a presence. So it's not all going to be in markets where Amazon operates, but primarily, in general, Amazon will benefit from the growth of this industry. Already, Amazon's revenue has grown to reach $620 billion over a trailing 12-month period, and that's up from around $100 billion in 2015. Its revenue has grown by roughly $500 billion in the last decade. That's how much incremental revenue Amazon has added to the business. And for a business like Amazon, that's built on the foundation of economies and scale, revenue growth is more meaningful because as it grows revenue, as it adds customers, the cost to serve each customer decreases. Let me explain what I mean. So imagine Amazon is making a delivery to your house, wherever it might be. Now, imagine that another customer on your street joins Amazon and makes an order on the same day that you make an order. And so now Amazon, it's going to visit your house anyways. And now that extra customer on your street is now spreading the cost of delivery across two customers instead of just one. So the cost to serve you decreases because now there's another customer on the street. So the cost of sending out a van or a truck or whatever vehicle they send to make that delivery is split on two customers. Now imagine a third customer, right? And so you can understand as Amazon grows, adds more customers, those customers order more frequently, the cost to serve each customer decreases over time. That's the definition of a business built on economies and scale. which is something that is attractive to investors. You want to see a business demonstrating economies in scale, because that means if it continues to grow, which Amazon has demonstrated, its profits will expand with growth. That's an excellent characteristic. And Amazon has already demonstrated that. The operating profit margin jumped to 10% in the most recent trailing 12-month period. That's up from around 1% a decade ago. So you're seeing evidence of this economies in scale growing the operating profit margin over time. And if you look at its cash flow from operations number, it's even better than the operating profit margin because a significant share of Amazon's expenses are non-cash expenses, things like depreciation and amortization and stock-based compensation. Those are non-cash expenses. When you add those back, the cash flow from operations is at 18%, up from around 9% in 2015. Another thing I've commended Amazon on over the years is the management's ability to invest billions of dollars into the business, hundreds of billions of dollars into the business effectively. That's not an easy thing to do. It's easier to invest in your business in small sums like $100,000. You'll find it easier to find opportunities to spend $100,000 in a way that improves the profitability of your business effectively, not wastefully. But when you're dealing with $100 billion, it's harder to do that, right? Imagine if one of you that are watching owns a business. Imagine trying to find profitable employment for $100 billion. What would you put that money into that will deliver good returns on invested capital? Very difficult to do, right? So Amazon has done that effectively over the last decade and more. And so investors can be reasonably confident that the management team is a good steward of capital. They know how to manage money well. They know how to utilize the cash that comes into the business. They're not wasteful. And then finally, I like the valuation of Amazon stock. With all these excellent characteristics, I would be willing to pay a higher price for Amazon stock, but you can buy Amazon stock at a forward price to earnings of just 30 right now. And if you look at my discounted cash flow valuation model for Amazon stock, which I have a whole video on, I will link to at the end of this one, my intrinsic value per share for Amazon stock is $286, and the current market price is only $228. So for all of these reasons, I think if you're looking at Warren Buffett's portfolio and trying to determine which one is the best stock to buy in 2025, in my opinion, it's Amazon stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.